as we've been leading in, and you and I have been discussing here throughout the whole year, I've been nervous about the economy, especially as we were heading into this election. And now the world's looking at things, I think, through a different lens. We've got the most pro-growth president in the United States history, with a cabinet that's looking at talking about cutting expenses, pro-growth policies like we've never seen. And so, this is a really, positive moment, although there still are a lot of looming challenges that I personally see in the background right now. So it's an interesting time to be here, and ultimately, I think that it develops into a couple of different themes as we move forward here. One, I think that we're going to see obviously a manufacturing revival here in the United States, and so made in the USA was something that I used to see when I was a kid on different ideas and different things, and now it's mostly made in China. Well, I think that that's a beautiful idea. Is going to come back, and that's going to really boost GDP, which we definitely need. Oil production is another one of these things that's incredible. So faster permits is what we're being promised, but that's also going to bleed over into the mineral space. And so we need critical infrastructure minerals like copper, uranium, silver, gold, obviously. So I'm bullish on a lot of those ideas here, especially as we do it in the United States. Cleaner and safer, not cheaper necessarily, but cleaner and safer than anyone currently in the world. But maybe a focus on transportation is not a bad idea. And then, the third way that's really going to help is we're going to see some leadership really develop in this financial and technology space again. The United States, if we get this right, we can release, the best that capitalism can afford with some of the best ideas standing behind it. Why is that important? Well, with AI, we've got all this great technology, but unless it gets adopted, then it's not really impacted us. And so I'm really appreciative of the fact that there's, teams that are going to be in place today that I feel maybe a little bit more comfortable about how AI is going to be thinking about things, how some of those developments are going to be happening. But in that technology space, be thinking about financial technology as well, which ultimately leads us to blockchain and, different moves here by the SEC. And now that's going to be looking a little bit different with Gary Gensler coming out on January the 20th. So I think that the United States is just primed right now to lead, to develop, and to continue to innovate as we move forward here in the world. And I'm just really hoping for just a national revival in the grassroots places, and that we can come back to some of the things that have made us Americans again, and look beyond some of what this past 4 or 5 years has been.
Yeah. As you talk about Bitcoin and digital gold, you called it in the notes. Gold, silver, Bitcoin. You liked all of these. They've done well this year, and you like them all again for 2025?
Yeah, absolutely. So, when I want to give you some ideas, Nicole, everyone's got the idea of talking about big tech. And so I'm saying, the Mag 7's very, very expensive right now. So let's maybe diversify outside of that. And one idea that I didn't mention in that is, if you're a baby boomer and you're entering into retirement, you got to have your parachutes in place. You got to have the defense here. And so I'm going to give you some ideas that are defensive, that are going to help you, I think, whether, the market goes forward positively in one direction, or it's, kind of a little bit up and down, which I think most people are expecting. So gold is at an all-time high, and I think it's going to go much higher. Why is that? Well, because central banks are currently buying it at record rates right now, and China's telling you that they're buying it at record rates today. And so, there's a supply and demand complexity there, but there's also a real question of whether, the United States dollar is going to be able to keep its purchasing power long term. And so instead of buying, long-term treasuries and, trying to, build your nation with that, you're going to be looking at things that are going to likely have the ability to navigate a higher inflationary environment, which is where gold is going to be navigating that much better. So I think treasuries are too cheap today. But the second part to that is silver. That was my number one pick last year. By the way, it did outperform gold this year, as well as both or all three of the markets. And so that's a really amazing deal. But here's the point, Nicole. We're looking at less than $32 gold right now. $50 is the all-time high. This is a 40% discount. That's a Christmas miracle. Everyone wants a good discount this year. It's in silver. And silver, in my personal opinion, is going to break 50 in 2025, and it's going to go beyond that. And so it's going to far exceed what gold is going to do for actual returns. And so the miners are going to work really well as well. But then getting to my last point here, and that is the digital gold Bitcoin. We are early in this idea of cryptocurrency and Bitcoin. And I was being asked the question, David, is it still a good buy at $60 and $70? Yes, it was a good buy at $60 and $70. Is it a good buy here at $90? Well, yeah, I think that it is a good buy at $90 and $100. Why? Because it can go much higher. In fact, we heard that it was going to go much higher as a result of the scarcity component that's going on right now, with Bitcoin not being produced at a rate that is able to keep up with how fast people are purchasing it. And so if this trend continues, we're going to see this become very scarce. And I personally believe that we're going to see, $250 Bitcoin probably at the end of 2025, if not 2026.
Yeah, I know you're also focusing on the national debt, the price of housing. I mean, we're still seeing housing affordability being an issue. What the Fed may or may not do. In fact, you think that the Fed may have cut too early. We were talking about the expectations of a Fed cut next week and 3 next year. Is that too much? Is that the right amount?
I think that they're going to be higher for longer, as they've continually promised here, at least in the early innings of this. With an economy looking as strong as it is, and everything at all-time highs, like you just named, stock market's at all-time high, gold's at all-time high, Bitcoin's at all-time high, real estate's at all-time high, debt's at all-time high. Inflation, that means that it costs more to buy those things. Inflation's still present with us. I think that we're going to see a lot of inflation here going forward into 2025. There's a lot of ways that is not really going to be curbed. And so, yes, I think that the Federal Reserve ultimately, created the Arthur Burns mistake, which was cutting too early ahead of an election. That was the Nixon election. And it took a Paul Volcker to come in and having to raise that Fed funds rate up to 20% in order to actually stomp out inflation. And if you think about inflation like the embers in the campfire, they can calm down for a little while and not look like there's really anything there. It can even feel cool to the touch and over the top of it. But you get a decent wind in there and something that could, light it up, like, I don't know, a whole bunch of spending or maybe a whole bunch of markets going out of control and continue to go up and up and up, which works great if you have assets, but not if you don't have assets. And so ultimately, I think that we're going to see inflation kick back up here in 2025. And then you just hope that you've got enough of a stomach in Jerome Powell to keep it higher. And then also that we've got the right policies here to do the thing that's most important, that is to do the cutbacks. You can't raise rates and then crank out spending like we've been doing in Congress and expect that we're going to see lower inflation. It does not work like that. Lower inflation is only as a result of the Federal Reserve and the Treasury printing less. And so we have to get back to that. It is absolutely critical that the Department of Government Efficiency is in place. And what a novel idea that here in 2024, this is the first time that we're really talking about efficiencies in government. And I think that we can all kind of laugh aloud as we talk about that. But it's here.
David. Yeah, David Stryzewski, Sound Planning Group. Thanks so much. Great to see you, David. Thanks.